How are you guys doing? Good? Yay. Good morning, Aiden. Good morning, Miko. Yay. All right, so we're going to get started on day 2 of our EverFi, right? We're going to do employment and taxes and tax simulation. So our bell ringer is yesterday was tax day for 2023. Like officially, you had to have your taxes postmarked by midnight last night if you were sending it in by snail mail, or they had to be in if you were filing them online by midnight last night. Otherwise, if you don't file an extension, you're late. Hi, Fran Sean. So did any of you guys have to file taxes this year? Or did any of you choose to file taxes this year? Anybody? Because I know a couple of you guys are working. I remember that. Hi, Jackie. I'm hoping this means you guys are just, typing in the chat. We're talking about taxes, Jackie. Did you have to file taxes? No? Okay. So did none of the rest are the rest of you guys working or not working? I guess that would probably be a really good question to start off with, right? Hi, Kylie. We're talking about taxes and hi, Brooke, and I'm asking students if they had to file taxes this year. Did either Kylie or Brooke, did either one of you need to? No? Okay. Hi, Sadie. Hi, Ipu. We're just talking about taxes because yesterday was tax day. And we're going to be doing taxes when we get into our EverFi. Hi, Analia. So I guess nobody filed taxes this year, or at least in this class period. Okay. I started filing taxes with when I was 16. Hi, Kevin. Nice to see you. Kevin, did you need to file taxes this year? No. Okay. You're tax free for the time being, William. Awesome. All right. Well, then I guess we'll move on to what we're going to do for the day. Remember our standards. We're talking about analyzing alternatives and consequences of your financial decision making in your development of financial goals. And we're looking at taxes at the local, state, and federal level. Now, you guys are really lucky here in Nevada because we don't have a state income tax. So if you move to a state that has income tax, you'll not only have federal taxes taken out, but you'll have state taxes taken out. And on tax day, not only will you have to file federal taxes, but you'll also have to file state taxes as well. And then Lord help you if you're in like New York, then you also have city income taxes as well. It's really crazy. The first thing I want to do is there's a crash course video, an economics one on taxes. So I want to play that, and then we'll get into working through our EverFi modules. So give me just a moment. I'm going to mute myself, and then I'll play the video, okay?
Hi, I'm Adrienne Hill. This is Crash Course Economics, and today we're going to talk about taxes. We're going to talk about why we have taxes, what they do for us, and why you should go ahead and take that raise that's going to bump you into the next tax bracket. Also, rebellions and the British Empire's bad judgment when it came to taxing colonies. While your struggles with taxes and the tax code may seem particularly unpleasant to you today, people have been paying and complaining about taxes for a long time, way longer than any of us have been alive, or our parents, or our grandparents. Ancient Mesopotamians paid taxes in the form of livestock and labor. There are ancient Egyptian texts and tomb scenes showing evidence of taxes, tax collectors, and even tax shelters. Taxation and tax collectors also show up in the Bible over and over. Taxes appear in Scripture as a necessity, like render therefore unto Caesar the things which are Caesar's. And tax collectors are in there as sinners right up with prostitutes. More recently, in 1927, U.S. Supreme Court Justice Oliver Wendell Holmes wrote, "Taxes are what we pay for civilized society. Maybe it's time we forgive tax collectors, too." So we've had taxes pretty much as long as we've had records of organized society. But why? What are the goals of taxation? At the most basic level, taxes raise money for government services. Taxes are used to promote the well-being of society, at least well-being as defined by the government in power. They help us afford services markets might not pay for on their own. Things like public safety and national defense and education. Taxes can be used to protect the environment. They can help a country implement fiscal and monetary policies meant to push along economic growth. Taxes can be used as a way to redistribute wealth in a society, from people who have more to people who have less. This can happen in a couple of ways, some more direct than others. An income tax system that taxes high-income earners at a higher rate than low-income earners is one example, and we'll come back to that. Government subsidies and vouchers, like food stamps and housing programs, also shift wealth. So do luxury taxes, basically an additional tax bill on expensive items like jet planes, expensive furs, and that really annoying diamond ring space on the Monopoly board. Governments can also use taxes to try to change people's behavior. Sin taxes on not good for you products like cigarettes and alcohol are meant to reduce consumption of unhealthy products. Gasoline taxes are meant to encourage people to drive less. France passed soda taxes to try to get people to drink fewer sugary drinks. Denmark passed and then got rid of a fat tax on foods that were relatively high in saturated fat. A handful of governments, including those in British Columbia, Ireland, and Chile, have instituted carbon taxes. These carbon taxes basically charge businesses and sometimes households for the amount of polluting greenhouse gases they use or create. These carbon taxes take different forms around the world. Residents of British Columbia, for example, pay an extra 6.67 cents per liter of gasoline as a carbon tax. For those of us in the US, Myanmar, and Liberia who don't use the metric system, that's about 25 cents per gallon. In Chile, power plant operators pay $5 for every metric ton of carbon dioxide that they release into the air. When economists talk about taxes, they sometimes divide them into direct taxes and indirect taxes. Direct taxes are paid by a person or organization to the government body that impose the taxes. These include property taxes and income taxes, where there's no intermediary, and I can't pass off the tax burden to someone else. Value-added taxes and sales taxes aren't exactly the same thing, but they're both good examples of indirect tax. They're collected by a store or seller or producer of goods, but they're actually paid by consumers. They're taxes that all consumers have to pay, regardless of how much money they make. A pair of socks at the mall down the street is going to cost me exactly the same as when a billionaire buys that pair of socks at the same store. Some economists say indirect taxes distort market prices and lead to one of the things most dreaded by economists, the Voldemort of economic outcomes: inefficiency. Economists also characterize taxes as regressive, progressive, and proportional. Let's start with regressive taxes. Regressive taxes are typically applied across the board, and on their face they might seem equitable because everyone pays the same amount. But regressive taxes take a higher toll on people with lower income than high-income earners. Sales taxes, especially on essential items, are considered regressive. That's why some places exempt food and prescription drug purchases from sales taxes. Some economists argue that fees for things like hunting licenses, toll roads, and driver's licenses are also regressive. Why? Well, imagine two drivers go to the Department of Motor Vehicles to get a new license. One makes $200,000 a year, the other makes $20,000. Both will pay exactly the same amount for their driver's license. The license fee is a much bigger hit for the lower income driver. And that's why regressive tax takes a disproportionate toll on people with lower incomes. On the other end of the taxing spectrum, there are progressive taxes. Progressive taxes are more or less the opposite of regressive taxes in that they shift the burden of taxation to people who make more money and away from those who make less. In the United States, our income tax is a progressive tax, meaning individuals pay more in taxes as they make more income. But before you start worrying about whether making an extra $100 this year is going to bump you into a higher tax bracket, it's worth understanding how the progressive income tax in the United States works. When the IRS calculates how much you owe in taxes, it uses marginal income tax brackets based on the amount of taxable income you earned in a year. These marginal tax rates represent the highest possible income tax rate you could pay. Right now, there are 7 tax brackets. But no matter which tax bracket you find yourself in, you're not going to pay that rate for your entire income. Instead, your taxable income gets divided up into chunks that correspond to each tax rate, and you pay the associated rate on each of those chunks. For example, say you made $37,450 as a single filer last year. That would put you in the 15% tax bracket, but you'd still pay the lower 10% rate on the first $9,225 you made. So if you took the extra $100 and made $37,550, you'd be bumped up to the 25% tax bracket. But again, you'd only pay 25% on that extra $100. Your effective tax rate would be lower. The other thing you got to keep in mind with U.S. income taxes is there are a huge number of tax credits, tax exemptions, and tax deductions that reduce the amount people owe. So your tax bill will never be as painful as that 25% tax bracket might make you think. Many other countries around the world have their own progressive income tax systems, but it turns out it's difficult to measure just how progressive any country's total tax system is, especially compared to another country. It's not as easy as looking at countries with the highest marginal tax rates and deciding they have more progressive tax policy, because so many other taxes and tax breaks come into play. In the U.S., some economists argue the progressiveness of our income tax code offsets the regressiveness of many other taxes we pay, if progressiveness and regressiveness are even words. So we've covered regressive and progressive taxes. The third type of taxes are proportional taxes. Proportional taxes require the same percentage of income for all taxpayers, regardless of how much they make. A flat tax is an example of a proportional tax. You'll hear politicians touting flat taxes, in part because they're relatively simple compared to the US's current incredibly elaborate tax code, and because they kind of feel fair. Imagine a flat tax of 10%. The woman making $200,000 ends up sending $20,000 to the government, while the guy making $20,000 sends only $2,000. They both feel a 10% pinch. Economists who oppose the flat tax say that feelings have no place in the tax code. They argue a flat tax isn't as simple or as fair as it seems. For one, they say that getting rid of all the tax deductions and exemptions and credits we mentioned earlier could change a whole lot of the economic decision-making that happens, from saving for retirement in tax-protected accounts to home ownership and donating to charities. All those activities are encouraged by the tax code we have now. Like we mentioned before, there are economists who argue the progressive income tax in the U.S. offsets some of our other more regressive taxes. They say a flat tax would shift the total tax burden away from the wealthy to the lower and middle classes, actually making our broader tax policy more regressive. All of this is complicated, even if it sounds simple. Before you buy into anyone's plan to reform the tax code, take the time to really read into what it might mean to the economy, and make sure you're comfortable with all the implications. Speaking of implications of tax policy, they can be incredibly serious and fascinating. A poor tax choice by a government can and has resulted in rebellions. Let's go to the thought bubble. One tax rebellion you've probably heard of is the American Revolution. After the 7 Years' War ended in 1763, Great Britain had a huge debt to pay off. It needed to raise revenue from somewhere and look toward the colonists in America. In 1764, the British Parliament started taxing molasses sales. In 1765, they enacted the Stamp Act, which added taxes to paper and legal documents. Colonists grew more and more frustrated with British officials, both with tax policies and other interventions. Anyway, you know how it goes. No taxation without representation, Boston Tea Party, a big war, the French get involved, and we end up with a free America, with taxes and representation, except in Washington, D.C. More recently, in India, there was another super interesting tax rebellion called the Salt March. In 1930 India, the British were in charge, and they had laws in place that outlawed Indians from collecting or selling salt. Instead, they had to buy it from a British monopoly, which collected an 8.2% salt tax. Mohandas Gandhi decided to defy the Salt Act by walking 240 miles to the coast of the Arabian Sea to gather tax-free salt. Along his route, more and more Indians joined him in the peaceful civil disobedience. He got to the beach, picked up a piece of salt, and broke the law. Thousands of others followed his lead, making and selling non-British salt in a non-violent resistance. The Salt March was extensively covered in newsreels and newspapers, and it brought international attention to the largely non-violent Indian struggle for independence. All that because of taxes. Thanks, Thought Bubble. Of course, there are other ways to get around paying taxes you don't want to pay, other than fighting or starting a mass civil disobedience movement. Based on historical documents, we know people have been running away from paying taxes for years, some literally picking up and leaving their homes. Other people have discovered career paths that get them out of tax bills. Historians think that some European men became monks during the Middle Ages to avoid being taxed. There's proof that some Chinese men joined Buddhist monasteries to get out of paying taxes. There is plenty of room for disagreement over how big government should be and what it should and shouldn't be doing. All those discussions matter to you as a taxpayer and as someone who benefits from taxation and government services. But as we've said time and time again, there's some services the market just won't provide, some protections it won't guarantee. No one likes paying taxes, but we do like what they do for us. Thanks for watching. We'll see you next week. Thanks for watching Crash Course Economics. It's made with the help of all these nice people who also think salt taxes are incredibly regressive.
All right, so just so you know, a quick little review over taxes. We are going to be doing 2 assignments in our EverFi Financial Literacy course today. So I need you to open up your Clever and click on your EverFi app. And so you are going to get, obviously, our home page, like it shows right here. And the 2 that we are going to do are the tax simulations and the employment and taxes. Now, the tax simulation is kind of different than what we've had thus far, okay? The employment and taxes is like the bottom one. You're still going to have your assessment grade where you have to have the tab and your assessment grade showing me which one that this belongs to in your name. And yes, I have literally yesterday watched or looked at, I don't know how many people who tried to turn in the wrong assessments. They tried to turn in something from an earlier course for these assessments. So now you see why I'm so adamant about this. So you have to have your traditional, I've got to have the tab, and I need to be able to read that it has the right lesson on there that shows me that that assessment score is for that lesson with your name on it. But on the tax simulations one, you're going to actually do, you're going to go through 5 different people and you're going to work through each one. When you complete each one, you'll get a green check mark next to the people. You are going to do a screenshot of all 5 people showing me at least your name. I need to know that this is yours for your name, okay? So this is what your screenshot will look like for your tax simulations. That's going to be a completion grade. You got to have all 5 done to get the full credit. And it's an all or nothing. If you don't have all 5 check marked, you're going to get a minimum F. I'm going to send it back and say do it again or finish it up. And then you have to have your assessment grade for the employment and tax lesson in there. So let me go back. All right. So the tax simulation, like I said, you're going to complete each lesson, each person, right? Once you've completed and gotten a green check mark for each person, you're going to take your screenshot, make sure you show your entire computer screen, and you're going to submit it for completion grade. Then you're going to go back and you're going to click on the circle titled Employment and Taxes. You're going to complete the lesson, take the assessment, take your screenshot. When you finish the assessment, make sure you show your entire computer screen and then submit your screenshot. Okay, so I'm going to have one that looks like this and one that looks like that. Okay, so due today, this is what I want you to do today. These are due by Friday, is the employment and taxes in EverFi, the tax simulation. We already did budgeting and we've already done banking. Also closing on the 21st is your Module 10 Lesson 1 course arc and notebook. The quiz will close on the 28th. Are there any questions about what it is that I want you to do while we're hanging out together in here? Yes, no, no. All right, can somebody please respond either by unmuting or if typing it in the chat. What are you guys doing today in class? The EverFi tax assignments, there's 2 of them, right? The simulation one and the employment and taxes, right? You're gonna do both of them today and get those turned in, right? Yes, good. All right, so do you guys want me to try and play, if I can get it to play the music? Yeah? Okay, give me a moment here. Hang on. All right, so I'm just, can you guys hear it? So do I have to put it on the tab itself? All right, so I'm gonna mute my microphone, but I am here. You guys are gonna hang out in the chat while you work on whatever it is you need to work on. And if you have questions, like that's what I'm here for. Because we're coming up, we have like 4 weeks left, and I've got to start putting in progress report grades, okay? Also, I just want to give you guys a quick reminder that remember, everything will close on May 12th. That will be the last day for any and all work. And remember your final exams will start on May 12th. You'll do first and second period on May 12th, third and fourth on May 15th, and fifth and sixth on May 16th. So all work will be due by midnight on May 12th. You will have finished your final exams by Tuesday, May 16th. Remember, on those 3 final exam days, you will get your attendance by completing and turning in your final exams. Like, that is what's going to get you attendance. Obviously, you can't sit at a meet and do your finals because of honor lock. Okay? So just as a reminder about that as well. And then I think what I am going to do, again, a quick reminder, this is what your tax simulation page should look like. This is what you should turn in for your employment and taxes. And these are the items that are due. You need to make sure you get those done. And then I think I'm going to stop the recording because I don't think we need the video of just the music playing. Okay.